So there's some caution about on the currency front around the August the 4th referendum, as that date gets closer. To what extent is that affecting some of the activity we're seeing on the equity front?
Thank you very much, Alishia, and that's a good summary. Basically, looking at how the equity front is performing as of now, we are seeing subdued volumes in terms of turnover, in terms of the market, though at the moment we're still seeing a lot of corporate actions that are streaming in and creating a bit of activity, which is seemingly supporting the NSE 20, which is fairly impressive.
Well, let's take a look at some of the earnings reports. Equity Bank yesterday showing first half profit rose 46%, driven primarily by interest income. It says the market clearly impressed as that share price reached its highest this year so far. What are your overall impressions of those numbers? Because you've certainly had time to digest that earnings report.
Well, thank you very much. Equity Bank basically has been performing excellently well, especially looking at the environment that we are in right now. The economy is already on a rebound, and also in addition to that, their expansion program, which is already beginning to reap some bit of benefits, because as at now, they are not investing a lot in terms of capital expenditure. And so basically, they're beginning to reap a lot of revenues from interest income, which was the major source of income as at now. And looking at it going forward, basically, it is very, very well positioned because of some of the products that it have, like M-Cash, which is basically one of the things that it has been able to come up with, and is really boosting its revenues. I guess right now the concern will be making sure that they take care of the non-performing loans.
Yep, well, interest income, as you say, it still seems to be that driver for income when it comes to, these banks' earnings. What direction do you see interest rates being charged by banks taking moving forward, though, where these banks have been under pressure to lower their rates in tandem with the Central Bank of Kenya?
Thank you very much. Basically, looking at the interest rate, the direction that the interest rates are taking right now is that they are on the decline, and some of the commercial banks we're seeing have already started affecting that in terms of their lending rates, like KCB, Cooperative Bank, Barclays. Equity Bank, we had to see a lot of signaling in terms of that direction, but basically for it to remain competitive, it might have to consider that, and definitely that would affect in terms of their loan book. But as at now, looking at their balance sheet, which is fairly stable, they're very well positioned to still take advantage of the market, and their niche as at now is very, very good in terms of the economy, because we are seeing agriculture performing fairly well, and definitely is going to be able to position it to perform well. And looking at their half-year results, which are very impressive, we might continue seeing that for the rest of the year.
Of course, this is a player that has built up a significant regional muscle as well, with operations in neighboring Uganda and Sudan. But there are two tales being told by those territories, where we've got Sudan managing to contribute to that profit line. We've got the Ugandan unit losing 3 billion shillings in the second quarter. That was down from 12 billion in the first quarter. What are your expectations out of that unit? The CEO certainly seems to be optimistic about operations there as we move forward, but is it posing any concern for the market at this stage?
Well, the regional expansion definitely has its risks, because all these markets are dynamic and different in terms of the operating environment, and because of that, equity has to be a bit cautious. And Dr. James Mwangi has been very, very vocal in terms of saying his approach basically as at now is being very cautious in terms of how they expand, and because of that, they're going to be still very, very well positioned to be able to take advantage. And I guess for now, it's it's for them to be very cautious about their expenses, how they manage that, and how they continue watching their bottom line. And I guess that's what it seems to be their focus as at now. And because of that, we might see them focusing a lot on the Kenyan economy, which is rebounding, and a bit cautious about the region.
Taking a look at that strategy then moving forward, how do you see their strategy evolving as we progress through the next half of the year, where that concentration is in the Kenyan market, and where they've already shown quite significant growth in tapping the unbanked segment of the economy?
Well, first of all, their new product, M-Cash, which Dr. James Mwangi is talking very positively about, with already 400,000 new accounts, is going to really get them a bit of leverage in terms of the Kenyan market. And also looking at their loan book in terms of how they are being able to manage their loan book, basically they are very well positioned to take advantage of the businesses that are beginning to come up, SMEs as well as such. And because of that, they might continue focusing on that strategy, which is bearing fruits already. And looking at the region, basically as at now, it's more of trying to understand the different regions that they are in, and to see how they can be able to still tap into the opportunities that are rising thereof.
Would you be a buyer now? Because some are questioning just how much steeper their growth curve can get.
Well, looking at equity, basically right now it looks like it's almost maturing, because we have seen it doing triple-digit growth, and now it's really struggling to maintain the double-digit. And because of that, as of now, I would be very cautious about buying the stock, because looking at it, especially in the recent past, technically it has already gained 40% in terms of the share price. And because of that, we are a bit cautious about whether buying it now might be something to keep on. But basically, some of the people who bought at the lower prices of 18 and such can be able to consider profit taking as at now, and be a bit cautious that they're buying more of a long-term buy.
Well, taking a look at one of the worst performers yesterday, KenolKobil, falling back 2.8%, and traders at this stage seeming to be pretty cautious on this counter right now. Samuel, run us through what the market's making of the story, because the share price has been rising quite steadily of late, with no real concern about the court battles that have been persisting, and it's now only that these court battles seem to be posing some concern for the market.
Well, thank you very much, Alishia. Basically, KenolKobil, looking at it in terms of how it has been performing recently, we've been seeing them being very much in the news, especially on the positive front, because recently they won the court battle, and that also caused a bit of interest in the stock. And last week they gave us a profit preparation, because they're just about to announce their quarterly performance, which they are already projecting to be fairly good. And because of that, we saw a lot of interest in the stock. But this new turn of events, basically in terms of the court battles, basically is also creating a bit of a caution in the market. And so we are seeing the rally that caused it to rise significantly is making most of the investors begin to profit take, and because of that we are seeing a slide in the share price. But they're just about to announce their results, and that might create a bit of activity on that counter. But basically, as at now, it's a bit of a cautious stock, because looking at how things are unfolding, basically it might not be as profitable in the long run.